look at Nvidia now. The shares under pressure this morning, down 2%, despite strong earnings, revenue, guidance. Kristina Partsinevelos joins us with more on the quarter and on this reaction by the street to the report. Kristina.
Yeah, you mentioned the stock drop after Nvidia beat on and it has multiple culprits. The Q3 guide might have missed buy-side whispers by $1 billion. Operating expenses came in a touch higher than people wanted, and data center sales missed for 2 consecutive quarters, partly from losing China market share. But this could just be profit-taking after a 30% 3-month run in the stock. The demand story stays intact. Blackwell chip sales jumped 17% sequentially with, quote, extraordinary demand, according to the CEO. He also expects AI companies to spend roughly $3 to $4 trillion over 5 years, with Nvidia capturing potentially 70% of that. Wall Street, though, mixed. A lot of reports out. At least 10 analysts this morning that I just counted hiked their targets, but JP Morgan sees data center growth continuing. Goldman expects, quote, meaningful upside into 2026, but others are a little more cautious. HSBC warns, quote, of limited room for further earnings upside or share price catalyst near term without clarity on 2026 spending. Morgan Stanley notes the stock is selling off, quote, certainly indicates that sentiment has caught up to growth potential. China, of course, remains a wild card that CEO Jensen Huang teased, quote, the opportunity to bring Blackwell to China is a real possibility. We just have to keep advocating. In other words, lobbying the government. So if those export restrictions ease, China could provide the next major growth catalyst Nvidia needs to keep this momentum going. But we have to highlight that growth is decelerating, guys.
Kristina, we gave you a shout out in the 9 a.m. talking about customer concentration, large percentages of accounts receivable being from a few customers. You obviously found that notable enough to mention.
Yeah, and I definitely got a lot of comments online. So it's 56%, like you mentioned, 3. One of the top customers is contributing 23%, and it's these large hyperscalers. The bulls will argue, hey, that's great. These companies have billions of dollars. Nvidia is giving them chips first because they have the demand. And don't worry, if one of those companies like Microsoft or Meta decides to pull back, there's such insatiable demand elsewhere that they can easily fill it from the enterprise side, from the neo cloud side, from the sovereign wealth or sovereign AI side. And then you have the bears that are saying, guys, shouldn't we care that Nvidia is catering to just a few customers? So it's the big debate right now, especially online in regards to that tweet.
Yeah, normally it's seen as a risk factor, but not when demand is outstripping supply like it is on this one. KP, thank you.